welcome back. You're watching Taking Stock, and it was another week of records that we are taking stock of with our special guest, Samir Arora, who has flown from Singapore, especially for us here at Traders Carnival. Samir, real estate has made a lot of money this year. And a lot of people are getting bullish because a lot of people think that this is one space which is under-owned. Would you be in that camp?
We don't buy stocks on the basis they're under-owned or over-owned. They should justify their...
Also the RERA is coming. So
the only thing is that I think the commercial side is working well in the real estate, so that has some logic. Beyond that, there is no logic in my view, so we will not buy. We haven't bought.
Okay. On the market as a whole, Samir, you've been a part of, I think, many cycles. I don't know how many decades.
What's that?
No, I'm not talking about your age here. But your experience. Is this cycle different from what we've seen in the past?
No. Past cycles were much bigger. If you look at my 99 cycle, the Alliance mutual fund was up some 280% in a year, in 1 year. It went from, it went up 280%.
Wow.
Or maybe 180, no, I think 280%. Yeah,
in 1 year?
Yeah, in 99. Yeah. Because that time I remember that I was meeting Mr. Mohandas Pai, and Infosys was up some 5-6 times. And I told him in a meeting that how long do you expect us to subsidize you? Because my Z is up some 15 times or something like that. So those were the days. These are all.
You think these days they're coming back?
No, they don't come back. They never came back even in 7 to that extent. No, not at all. That was very sector. It was a new discovery in India, the tech sector and all that. So now it's a normal run. It's just that this quarter looks a bit very good in that sense for everybody, and not otherwise it's not been such a. Last year, what was the great return that anybody made at a portfolio level? Nothing much.
You know, in every bull market, we see people latching onto a theme. You know, some people used to change the name to IT, some people used to then change the name to education, a lot of people said real estate. Now what we're hearing is every week there's some kind of demerger going on. Samir.
Not so many. Which is the new one you've heard?
There's been, of course, Indiabulls real estate, and a couple of other, every stock that's running up, people are saying that because it's going to demerge. So, is that a bit of a worry?
No, that's not a big worry. I don't think it's happening to that scale. Because I can't give you even 5 examples right now which might be going on. So that's okay. That's part of life. I think the bigger thing, I thought you were going to say that everybody's piling on to financial as a theme of any kind and every kind, including state-owned banks. Look at it this way. If the government says that we should consolidate the industry, it is very positive, big picture, but it also means that whatever you think is a good bank, if at all there is any, which also you may have doubts on, but if there is a good bank, that means it will be forced without your being given a choice with some bad bank within the same industry. That means creating at least micro problems for another 3 years. So some things may be macro good. As I said, ease of doing business may be good for India. It doesn't mean it's good for my stock market. Because it makes new people come in very easily.
On financials itself, NBFCs, they've seen a big run, right? I mean, the likes of Bharat Financial. But housing finance in particular has had a stellar run. Any stock in your portfolio?
We have, those are big picture themes which can go on for a long time. As I said, we have all the finance of any kind that you want, including stock exchange. But we don't have microfinance, and we would rather short them if we thought that the rally in this world was a bit less.
Okay. We were talking to a lot of global players, global investors last week, and the one takeaway we got is that at least from a global developed market versus emerging market standpoint, there's still perhaps more steam to go for emerging markets because of growth, recovery, etc. You would concur?
Yeah, I think I agree with that. And also, actually, whatever India is doing at a big picture, everybody likes. Everybody likes this thing that on subsidies, you've basically got away from oil subsidies nearly completely, that even now you're increasing kerosene prices and stuff like that, and all the other things related to other than this private sector investment, which has been the bugbear. Other than that, I don't think there's a problem with India which anybody should have, that why India is getting this money. It is only, I think, this mid-cap thing which makes people who, if I have it, I enjoy it. But otherwise also I feel that if it had just been a little bit more steady, I would be able to hold it for long and therefore maybe in the end make more money.
No, but between India and say a market like the US?
See, the US, if you get really 15% tax, right now they are saying 15%, but it might only be for a 10-year window.
Okay.
then it won't be good enough, because I assume that the corporates will say that it's not enough time for us to take advantage of it if we have to make new investments. But what if they allow their old money to come back, which is lying outside with Apple and Google and all? So those stocks or that money would be big. And so in that sense, if US does very well, it doesn't help India in that sense, although at one level everybody is lifted when the tide is rising. But if you want to compete, you will say US becomes very attractive if some of these policies happen. But I think India is in a good spot. There's no doubt about it.
Samir, in a world where people are buying Snapchats and Facebooks of the world, the stocks that are still making new highs for us are all in the old economy, right? Like Maruti made a new lifetime high today. Reliance has been now making a move there. Asian Paints and all. So, your thoughts on that? Especially the auto story, the way Maruti and Eicher, the likes of these have been moving up.
Well, we had Eicher for about 40 times, but we don't have it now. Okay. Maruti we still have. So I think Maruti is viewed as among the large caps an obvious, simple, one-line theme. Yes. That low cost of maintenance. India, if you see any sector, even if you look at DMart, because it is supplying to the lower segment, mass segment, people can imagine a big market. So I think Maruti will be a default thing. Even we don't overly analyze it every day. It just looks a very easy to outperform kind of thing.
HDFC Bank kind of story?
It may not be like that, because in theory you can say that in HDFC Bank there's an advantage of this taking a market share from state-owned. So actually you don't have to expand the market. Yes. You can just take somebody's market. And I think that has been half the story of more of all the private sector banks. It's not so much that you are making a new sector. So in that sense, an auto is generally more cyclical in our context. So it won't become that kind, but it's still okay. I mean, it's a...
One slow and steady mover has been L&T. I mean, hitting new highs every day almost. You believe that there is a recovery in the capex cycle?
We have no comment on it, but we are not short.
Okay.
We don't.
So the theme...
actually, my thing is philosophically, I think that their spinning off businesses is negative because of a holding company discount concept. So these are all bull market stories. In bear market, you will say give massive discount to a company which you hold at an underlying level and which is itself separately listed. And also, it doesn't, normally when you spin off businesses, it is when there's a hidden business which otherwise should get a much higher valuation. Yeah. Here, the conglomerate gets a high valuation, whereas individual businesses in IT and even financials actually don't get that high. So I don't understand it.
Okay. Samir, let me try my luck and let's see if you are being generous here. Any theme, any stock that you have recently studied that you've liked in Indian market?
Well, I mostly do Indian market only, so the day and night is that. New themes, see, they're not going to be new themes, but we bought the stock exchange so that you can call it a new theme if you want. We have bought 2-3 stocks, but haven't bought them with great style because, you're coming in actually mostly following somebody else in this case.
You bought BSC or MCX?
No, BSC. MCX, I don't consider my mind as a regular stock share, but it is a commodity.
No, because commodity options being introduced, everything getting in one platform.
No, but I haven't bought it. Okay. So generally, okay, this is one of the new ones. But broadly, no, nothing so greatly new. It's just that, you move around in the same names here and there.
Okay, Samir, just one final question, and before we end the show, since you are at the Traders Carnival, what would be the one sort of maxim or one pearl of wisdom that you want to share with all the traders?
See, last time my topic was don't trade too much. I'm not a trader, even though I short, because even my short will go on for years, 2-3 years. And this time it is actually, if I look at it, I think that difference is my new line. A difference is not a difference unless it makes a difference. So what happens in trader thing is, for example, let's go back to, now let's not keep repeating the name HDFC Bank for everything, but let's say any private sector bank. What is the need to analyze it every quarter to say whether the earnings growth was 20 or 21%? Because obviously a lot of trading happens that day because somebody says, in previous quarters that no, it actually didn't come at 21, it came at 20.1, and obviously people sell it. Yeah. So what has been the end result? Let us show the performance of these guys who trade on every news. There is no need. I think that might be the best lesson for these guys. That hold it, guys. There's a bull run going on. Don't trade every information.
All right.
Get the big picture right, whether it's up or down, and But if you want to take a profit home because I have to close my book because of the long weekend, okay, leave every weekend, leave a few percent points for others.
Yeah, that's fair enough, Samir. Thank you so much for joining us, and of course, looking forward to your presentation, and we'll have some part of that, of course, on the channel as well. With that, it's a wrap on Taking Stock. We'll leave you with some trading ideas from Ashwini Gujarat.
Nifty closed the week fairly strong, and now for the next week, I would think that last couple of days we've had a narrow range, and once that narrow range breaks out, we should be looking at next targets about 9,500. Similarly, Bank Nifty closed strong for the week, and next target here could be closer to 22,800. So both these indices should be bought on dips. In Friday's session, small banks did well. The small private bank space seems to be coming out with good results. So that could lead to further rallies in Karnataka Bank, where we are looking for a target about 190. On Federal Bank, which moved well on Friday, more rally could be here. This has a target of about 120. And finally, DCB, one should look for a target of about 200.